Welcome back to Investing Talk Podcast. Today we're taking a close look at URG, a U.S.-based uranium mining company. You sent over some really solid material, a due diligence report, recent production updates, and a stock analysis. Quite a stack.
Yes, a good amount to get into.
So our mission here is to pull out the key insights, really understand where URG stands right now. We'll explore their financials, operational progress, how they stack up against competitors, and the potential risks and opportunities ahead.
Sounds good. Where should we start? The financials.
Let's do that. The revenue figures for 2024 certainly caught my eye.
They really jumped. We're looking at $33.7 million in 2024, up substantially from $17.7 million the year before.
That's a big increase. What's behind that?
It seems to be a combination of factors. Higher sales volume, obviously, but also those higher uranium prices we've been seeing across the market.
And the analysis suggests this isn't just a one-off boost. It mentions expanded production capacity and long-term contracts.
That's right. They've locked in some contracts since 2022, which, gives them a certain amount of predictability on the revenue side. Helps with planning.
Okay, predictability is good, but then we look at profitability. And the picture changes a bit, doesn't it?
It does. Despite that revenue surge, URG actually reported a larger net loss per share in 2024. It came in at $0.17 per share.
Worse than 2023's $0.12 loss, and even less in prior years. So costs are definitely creeping up.
It certainly points towards significant cost pressures. They're spending money.
Which leads us to the price-to-earnings ratio. It's negative, naturally, since they aren't profitable. The report says MEDIC is 4.54. How does that compare?
Well, it contrasts sharply with peers who are profitable. A negative PE basically tells you the company isn't earning money per share right now.
So investing here is more about betting on future profitability, driven by their expansion plans.
Pretty much. It's a bet on growth turning into earnings down the line.
What about their balance sheet, debt and cash?
We don't have a specific debt-to-equity ratio in this info, but their cash position looks quite strong. It actually grew significantly.
Oh, how much?
Went from about $59.7 million at the end of 2023 to $76.1 million by the end of 2024.
Okay, so liquidity seems pretty solid. They can cover their short-term needs.
Seems that way. But turning to cash flow.
Free cash flow was negative in 2024, right? Because of capital expenditures.
Exactly. They're pouring significant money into expanding production capacity. That eats up cash in the near term.
Makes sense for a company in growth mode, I suppose.
It's very typical. And this ties into the return on equity, too, which is also negative, around mega 0.69%, below industry averages for profitable firms, obviously.
Okay, so financially, growing revenues, strong cash balance, but currently unprofitable due to heavy investment in expansion.
Got it.
That sums it up well.
Let's pivot then to their business strategy and position in the industry. What's their main competitive advantage? It really seems to boil down to their operational assets, specifically ramping up the Lost Creek mine and building out the Shirley Basin mine.
And the goal there is significant production growth.
Yes, they're aiming for an annual capacity of about 2.2 million pounds of U3O8, which is uranium oxide, by late 2025.
That's a substantial target.
It is. And those long-term contracts help secure buyers for that future production. Plus, there's the cost aspect.
That's right. Their mining technique, ISR, in situ recovery.
Correct. ISR is generally considered more cost-effective and has a lighter environmental footprint than traditional mining. That's a key part of their strategy.
So they're leveraging technology for cost leadership. How do they sit into the overall market? Are they a major player?
Not one of the giants, no. Think of them more as a challenger, focused squarely on expanding their U.S. production base rather than being a dominant global leader like, say, Cameco.
And the whole uranium sector is feeling the effects of geopolitics and the energy transition, right?
Absolutely. Geopolitical tensions can really swing uranium prices. At the same time, the growing demand for nuclear energy driven by climate concerns is a major tailwind for the industry.
But there are risks, too. Regulatory changes, trade issues.
Definitely. Those are always on the radar in this sector. Things can change quickly.
Okay, let's get into recent developments. The Q1 2025 update seemed pretty positive, especially for Lost Creek. What stood out?
Yeah, Lost Creek showed good progress. They dried and packaged over 83,000 pounds of U3O8, shipped even more, over 106,000 pounds.
And the production rate itself.
That's the key metric, I think. The wellfield flow rate, which indicates how efficiently they're extracting uranium, jumped 44% just since March.
Well, 44%.
Yes, reaching over 2,700 gallons per minute. That puts them on an annualized run rate exceeding 400,000 pounds from that area, a definite ramp up.
That is significant progress. And the other big project, Shirley Basin, how's that looking?
According to the update, construction there is on schedule. They're still targeting an early 2026 startup.
What kind of work are they doing now?
Things like road upgrades, installing monitor wells, general site infrastructure development, foundational work, essentially.
Good, good. Seems like operations are moving forward. Now, you mentioned regulations. There was that executive order about critical minerals and uranium imports, a Section 232 investigation.
Yes, that's definitely something to watch. The investigation looks into whether reliance on imports poses a national security risk.
And if they decide it does, how could that impact our energy?
Well, it could potentially lead to tariffs or quotas on imported uranium, which would likely benefit domestic producers like Energy by making their product more competitive price-wise within the U.S. market.
Interesting. So a potential positive catalyst there.
Potentially, yes. These investigations take time, and the outcomes aren't guaranteed, but it's a favorable signal for domestic supply.
Let's talk valuation again briefly. The price-to-book ratio was mentioned around 1.82. What does that tell us?
It suggests the market values the company at a bit less than twice the accounting value of its assets. It's not excessively high, perhaps indicating a moderate premium based on growth expectations.
Okay. And no dividend, which fits the reinvestment story.
Correct. They're putting capital back into the business.
But the beta is high, around 1.56. That means?
That means the stock price tends to be more volatile than the overall market. Expect bigger swings, both up and down, compared to, say, the S&P 500. Higher risk, potentially higher reward.
And risks are definitely present. Geopolitics affecting prices, regulatory shifts, operational hiccups during ramp-up.
Cost overruns, even foreign exchange fluctuations, though maybe less critical for a U.S.-focused producer. All standard risks for a mining company, especially in uranium.
How does Energy stack up directly against competitors? You mentioned Cameco. Energy Fuels is another U.S. player.
Right. Our Energy's niche is really being that low-cost domestic ISR producer, primarily in Wyoming, which is seen as a stable jurisdiction.
How's that different from Energy Fuels, for instance?
Energy Fuels also has a strong U.S. focus, but includes conventional mining and, importantly, processing capabilities with their White Mesa mill. Energy is more purely focused on ISR extraction right now.
And compared to Cameco?
Cameco is just much larger, globally diversified, with different types of assets and mining methods. Energy is smaller, more focused, perhaps more leveraged to the U.S. market dynamics and ISR efficiency.
So looking ahead, what are the key things investors should watch?
Number one is continued execution on the Lost Creek ramp-up, hitting those production targets consistently. Number two, bringing Shirley Basin online smoothly, on time, and on budget. That's crucial for hitting that 2.2 million pound target.
Yeah.
And number three, definitely the outcome of that Section 232 investigation. It could materially change the domestic market landscape.
And the potential pitfalls.
Delays in permits are always a risk in mining. And of course, volatility in uranium prices can significantly impact their economics, even with some long-term contracts.
Lastly, what's the general feeling among analysts covering the stock?
Generally positive, from what the report suggests. They see Energy as well-positioned to capture growing demand for U.S.-sourced uranium, especially with the push towards clean energy.
And the stock price versus their targets.
It seems the stock is trading below the average analyst price target, which implies analysts see a potential upside from current levels.
Okay, let's try to bring this all together. Energy looks like a company squarely in a growth phase, right?
Absolutely. Significant production increases planned, contracts in hand, potential regulatory tailwinds.
But, and it's a key but, they are spending heavily to achieve that growth. Hence the current unprofitability and negative free cash flow.
Precisely. It's an investment story. You're buying into the future potential, not current earnings.
And investors need to be comfortable with that higher volatility, indicated by the beta.
Yes, it likely won't be a smooth ride. Key things to watch are the execution on Lost Creek and Shirley Basin and that Section 232 outcome.
It really presents an interesting case study, doesn't it? Especially with the focus shifting towards nuclear power and securing domestic energy supply chains.
It does. It sits right at the intersection of those major trends.
So for anyone listening, this is definitely one where doing your own homework is essential. Check out their SEC filings, keep an eye on uranium market news, and those operational updates.
Sound advice.
And with that, remember to subscribe, like, and comment on this discussion. Let us know what you think or what else you'd like us to cover.